Here, we will briefly explain what is a stochastic RSI, and how to use it to make better trading decisions. It shows similar to the RSI, overbought and oversold conditions, but moves quicker up and down to improve sensitivity and generate a greater number of signals. It consists of two lines, the %K and %D lines. The %D line is a moving average of the %K line, so it moves slower. Cross points between the two lines show a potential trend change. An example can be seen here, where the stochastic RSI was in the overbought region and the %K line crossed the %D line to the downside. Then the price predictably moved down. Another example can be seen here, where the %K line crossed the %D line to the upside. After this the price moved up. This is, however, not always true, as no indicator can predict the future with certainty. Go to our channel to see real daily analyses using stochastic RSI. But keep in mind that trading is very risky, and always do your own research before investing or trading. See you soon.